Hello guys, this is IT Jegan, Capital Zone. People used to ask this question, Jegan, what is the difference between short strangle and short straddle, especially in intraday for expiry day or non-expiry day? Okay, there are some difference and there are some backtesting results which I'll talk to you, and one by one we'll see. Okay, first of all, let's understand what is short strangle. Okay, so short strangle. This short strangle is nothing but you are selling OTM call and selling OTM put. Okay, so this is called short strangle. Example, market as 25,000, then sell 25,500 call and sell 24,500 put. This 500 points up and 500 points down, you sell it. Actually, this is called short strangle. Okay, so this short strangle you can do it in intraday as well as in positional. But today we are going to see actually how we are going to do only in a intraday. That is what we are going to see. Okay, and what is a short straddle? Short straddle. You are selling call, ATM call and sell ATM put. That's called short strangle. Example, if the market is 25K, you are selling 25,000 call and selling the same strike price 25,000 put. This is said to be a short strangle. Okay, so which one we should do, why we have to do, and what is my favorite? So that is what we are going to see right away. Okay, so any beginner who is coming to the market first will get attracted to short strangle because it is very simple. You are selling for OTM call and for OTM put. The short strangle advantages, this is short strangle and short straddle. Differences. Okay, in intraday. Okay, first of all, the win rate is high in short straddle because you are selling for OTM call and for OTM put. The chance of not hitting stop loss is very high, so the win rate is very high, more than 80%. Okay, and short straddle, the win rate is moderate, close to 50%, because your stop loss will be hit. The profit and loss, say for example, you are putting 20% stop loss, or short strangle you are putting stop loss, the win rate is very low. Okay, and slippage is very high in a short strangle. The slippage is very low in short straddle, because when you are selling a short strangle or short straddle you are doing it with OTM. Okay, when you sell, the slippage is low. When stop loss is jumping, na, say for example, you are selling a short straddle for 100 rupees, but short strangle you are doing with 10 rupees. Okay, so when you put a stop loss of 120, then you may, the slippage is maybe 125, so the slippage is only 5% of the underlying. Okay, but here if you are putting 12 rupees as a stop loss and suddenly it goes to 20 rupees and the slippage is 100%. So the absolute value is less, but the amount of slippage is very high with short strangle. Okay, and profit wise, you take any short strangle in intraday, you take, say for example, 100% stop loss or lower stop loss. Most of the time actually the profit is close to 250 rupees per strangle, and this guy is close to 600 rupees. Okay, so this is profit per trade, per day it is close to 250, and this is close to 260. So thus the slippages you cannot afford here, but slippages, say for example, slippages and hedging, even you put 100 rupees now, then it comes to 500 rupees is the realistic profit you will get. But here very tough, because the profit itself very low, so it is very difficult to realize the profit. Okay, and DD generally it is low, and this DD is moderate, but this is called time to come out of the DD. So the short strangle, the problem is you rarely go to the drawdown. Bigger drawdown you rarely go, okay. But say for example, if you are having 10k sudden loss in a short strangle, then it takes so much time to come out of the DD, because you make 500 rupees profit, 300 rupees profit, 700 rupees profit. It takes another 6 months of time to come out of the DD. So the time to come out of the DD is very, very high with the short strangle. So time to come out of the DD is very, very high. This guy will come out of this one is very, very quickly, and that is the reason why I love it. There are two reasons I like the short straddle. The short straddle reason is the profit per day per trade is higher than 600 rupees. Okay. So say for example, you are entering at 916 and selling at the money call, at the money put 20%, 20%, or you take 920, or you take 930. Okay, you put a 70% stop loss. Okay, so you get some working strategies, something which is giving a good profit. An average profit is close to 600 rupees. Some strategies make you 1000 rupees profit, some strategy make you 500 rupees profit. On average it is close to 600. Since we have a 600 rupees profit, we can afford the hedging cost and we can afford the slippage. Okay, so that is the reason we are able to afford. With the short strangle we cannot afford the hedge, because we are making only 250. Okay, whether you are doing a short strangle, whether you are doing a short straddle, the margin is not a big thing. Okay, to sell a short straddle they are asking margin of 3L. Okay, if you are doing a hedging, the margin is 1.5L. Okay, so with the short strangle you cannot afford the slippages, because with the Nifty 1 rupee you need to buy, so that cost coming around 150, and already the profit is only 250, and 50 rupees or 100 rupees will go out of the slippages, and 150 rupees will go for the hedging. Then end of the day you will make no profit. At the end of the day there is no profit in short strangle. So you cannot afford what? Hedging and slippages with the short strangle. Third thing, time to come out of DD is really big. In short straddle, say for example, you are making 5,000 rupees loss in a day, and immediately in next trade there is a possibility that actually you may get a profit of 6,000. That is not feasible with the short strangle, because you are selling only option of chota premium, little premium. So very difficult to get a big profit. Fourth one, okay, here in short straddle you can capture both theta as well as a delta. Okay, what is the meaning? When you sell a short strangle, say for example 10 rupees, you are trying to capture only the time decay, because we are dealing only with the OTM. Correct na? We are not dealing with the ATM, we are not dealing with ITM. But with the short strangle, right? With the short straddle, what I used to do? I used to sell option for 300 with the Sensex, for a Nifty na 100. Okay, and say for example if I put 20% stop loss here and 20% stop loss here. Okay, and say for example 120 is the stop loss hit here and minus 20 rupees is the loss, and opposite side I will make a profit of 100, so I will get a profit of 80 rupees. So the chance of making good return is really high. That is the reason I am saying this, capturing the theta. At the same time none of the stop losses hit 100 rupees, I will get a 10 rupees decay here, 10 rupees decay here, and I will get 20 rupees decay. So you are trying to capture theta as well as the delta, both the trend and the time value. So this is possible only with short straddle, and RR is really good with short straddle. So RR, risk and reward ratio, is really good. Okay, so the profit whatever I said to the 250 and 600 rupees is only for expiry day. And if you are taking for non-expiry day, and how the intraday works in general, right? Say for example, for short straddle if you take it, for expiry day let me write as 0 DT, 0 days to expiry. If you are getting 600 rupees na, then for 1 DT you will get close to 500. For 2 DTE, the average profit will come down to 400. For 3 DTE, the average profit will come to 350. So like that the profit will come down, okay. And if you look at the short strangle right now, the short strangle, the average profit per day, average profit, someday you make profit, someday you make loss, right? So 250. Then if you think the 1 DT, na, it will come to 150. So this 150, as I said, actually you cannot afford the slippages, you cannot afford the hedging cost in general, right? In all aspect, if you take it an aspect, okay. The only advantage I am seeing in a short strangle is the high win rate. I was also a big fan of the short strangle because I started my career with the short strangle only. But right now I shifted to the short straddle because in all factors actually it is doing a good thing. So likewise, if you take it myself, right? So I was too much addicted with the credit spread in selling side. Too much addicted with the credit spread because rather than selling a naked option, it is good to sell option with the hedging. When you hedge the option, that is called a credit spread, right? So we used to do iron condor, we used to do iron fly, that is part of credit spread. But I have done some strategies in debit spread for overnight. So it is not necessary that when you start your career, you may be starting with the basic one. So once you get experience, right, you should understand how really works. So in Upsurge, I have given a video that is a debit spread, okay. So it is a completely different from the credit spread, wherein you will come to know how to capture the market movement in overnight with the exact rules, what time to enter, what time to exit, how to backtest, how much margin you have to put, okay. So everything I had discussed in Upsurge in a course. If you want, you can go and enroll this course and you will come to know all the details. Coming to this, right, so short strangle and short straddle. So short straddle is 90% of the time will win the short strangle except the win rate. The win rate is very low, but don't mind. So win rate is low, you will do multiple short straddle to increase your win rate. But short strangle, once you are into loss, it takes so much of time. So my bet strategy is the short straddle. So guys, now you understand the difference between short strangle and short straddle, because at first look, it may be very liquidity to do the short strangle. And as a beginner, right, so you can start with 1 or 2 short straddle so that you will get a confidence. But short straddle, if you are not really comfortable in the morning, you can start in the noon, because noon one will have a high win rate and low profit and low risk. So you can start with the noon one. I used to do the short straddle since morning till 2:45. So that's what I used to do. That is a difference. And guys, and thanks for this opportunity for Upsurge, and you can subscribe this channel. And if you want to know similar content with respect to the trading, intraday or positional, and go to the Upsurge and enroll the course. And as I said, actually I have already given a debit spread strategy in it. Thank you.